This is the biggest stock market crash since 2020. And unlike 2020, when the government stepped in and saved the economy by distributing stimulus checks, this time it's not happening. The probability of a recession is rising. The stock market is getting crushed and prices are about to shoot to the roof. We are on the brink of one of the greatest financial crises or changes in the global world order that we have seen in our entire lifetime, and this might be the greatest crash of the 21st century. Even the Fed has no idea what's happening. Just recently, the chairman of the Fed came out and said that we have underestimated the impact and the implication of the tariffs on the economy. Trump is reshaping the global world order. And whenever you make any kind of serious changes, you cannot possibly do those changes without causing massive crisis, without causing massive recession. But at the end of the day, any crisis produces winners and losers. And the bigger the crisis is, the more millionaires it is going to create. So this might be once in a lifetime opportunity. You might not make billions of dollars like some people do, but at the end of the day, you can still profit out of it. So here in this video, let's find out how you can possibly profit from the current crisis. If you're ready, give this video a thumbs up and let's dive right into it. Marco Rubio, who is the Secretary of the State of the United States, says that the US has to reset the global world order of trade. And that is not some kind of a conspiracy that somebody is trying to change the global world order. That is literally one of the most powerful people in the US politics who is clearly making it that the United States want to change the rules that the world is trading right now. So the question is that why would we want to do that? Because the trajectory that the world was going on over the last 20 to 30 years wasn't in the favor of the United States. Yes, the United States enormously profited out of it, but it made a lot of other countries much wealthier. And if the trend continues, sooner or later, the United States will find itself in a position where it's no longer the most powerful and the largest economy. This is the data from 2016. And back then, the United States was still the largest economy in the world. But if you look at it from the perspective of purchasing power parity, then China was already the largest consumer in the world, and the United States was at the second place. Nonetheless, US allies such as Japan and the UK and France still were at the top of the list. However, the problem was that the trajectory wasn't in the favor of the United States because the Chinese economy would have grown substantially bigger than the US consumer market, and it would still be at number 1. And the United States would slide to number 3. And that's the situation that the United States does not want to find itself. Because if the United States is going to become the country who is not the most powerful economy in the world, it is going to lose its status as the global currency reserve. And over time, the United States is going to become irrelevant. Because we had free trade, those countries could build products at a much cheaper price than the United States, and the US market was open to business for everybody. So you could build stuff in China or India or Vietnam, and you simply bring it to the United States, and you had access to the wealthiest consumer in the world. The United States is still the world's most powerful economy, and the US GDP per capita right now is around $80,000 to $90,000. If you compare that to a country like China, it's probably around $12,000 to $13,000. So you don't have such a large consumer market in China as much as you have in the United States. The US companies cannot possibly sell as much in India, for example, as much as they could in the United States. So those countries took advantage out of the free trade and started massively selling in the United States. And here is the interesting part. They would produce their products in China or India or any of those countries at a much cheaper price. They will ship it to the United States because of their free trade agreements and because there were not extra taxes. They will sell their products in the United States. They will take those profits and they will buy US government bonds. And now the United States has to pay them interest because you have a bunch of politicians in the United States who will borrow as much money as possible in order to be popular and follow their own agenda. And now the US government has every single year to take billions, not billions, but probably hundreds of billions of dollars of taxpayer money and pay China, India, and the rest of the world in interest. So if you do the math mathematically, over time, the United States will simply be in full debt to all of these countries, and every single penny that will be paid to the US as taxes will go in paying in interest to those countries that hold the US government bonds, which is why over time the US economy would have gone from 16% of representing the global share of the economy to 12%, while China would be the world's largest economy representing 20% of the global GDP. Again, these are the numbers by purchasing power parity. If you take the actual just dollars, then the United States will be a bit bigger than that, but nonetheless. And the United States will have less and less influence over the entire world. And that's something that President Trump wants to change. We want to make the rules in such a way where the US companies are going to have much more influence than they are right now. So, for example, right now, a lot of those countries such as India, China, the European Union, they have created rules in such a way where the US companies cannot possibly take full advantage out of their markets. China subsidizes a lot of their corporations. And that makes sense because the United States is far ahead of China. And if China wants to compete with the United States, then they have to support their local companies. But that's not something that the United States often do because the United States has an open free market. But because the United States is such a powerful economy, if you win the US market, you can win any other market. And for the China to catch up with the United States, they had to provide those subsidies. They had to support their industries. You cannot possibly blame them for that. And right now, they are as powerful as US companies. Take BYD and Tesla. Tesla is a privately owned company. Yes, they have enjoyed to a certain extent from the US subsidies. But if you compare how much Tesla enjoyed from the US government compared to BYD, which is the largest competitor of Tesla, there is no comparison whatsoever. BYD can keep selling their cars at a loss for years to come without making a single dime in profit. But that's not something that Tesla, for example, can enjoy. And over time, we know the winner. BYD will be able to sell their cars at a fraction of what Tesla is selling. And over time, they will simply drive out Tesla out of business and BYD will be the only electrical car company in the world. But if we want to find out how to profit from the current crisis, we first have to understand how the current changes are going to impact the economy. First of all, no more cheap prices. Over the last 8 years, globalization helped us to lower down prices. For example, if you want to produce something that is very labor intensive, you would produce it in a country where the cost of labor is much cheaper than the United States. And you will ship it to the US and you will sell it at a fraction of the price. Because of the effective global supply chains, you could easily ship it at a fraction of the price and it still will be much cheaper to produce it in a place like Vietnam, India and China compared to the US. Because if you produce steel in the US, it's very expensive. It's literally very, very expensive. It's not a very profitable business. But if you do it in China, it's much cheaper. And Chinese government is subsidizing the steel industry, which means that if you bring your steel from China, you're going to save a lot of money. If you want to produce, for example, pens, it's very labor intensive and it's much cheaper to produce it in a place like India, where the cost of labor is a fraction of what you would pay people in the United States. And that's why we had very lower prices. And that's why car prices haven't actually jumped much over the last 50 years, even though the quality of cars have improved dramatically. And that's just a couple of examples, and you can apply that example to everything else. But if we start suddenly putting all of those tariffs and we try to renegotiate every single deal out there, suddenly everybody has to pay extra taxes, which will lead to the fact that prices are going to rise. And these are not just my words. This is very simple calculation. This is common sense. And this is the logical consequences of the events that are taking in place. Even the Fed has simply acknowledged that prices are going to rise. So expect inflation to rise at least in the foreseeable future. Secondly, only the United States wants to change the rules. China does not want to change the rules. They literally like the current world order. India likes the current world order. The European Union. One of the greatest examples to actually understand how it works is to take a look at the relationship between the European Union and the United States. Like up until Trump, you could literally take a car from the European Union and bring it to the United States and you will pay a 2.5% in taxes or in tariffs, which is literally not that much. But if you take a car from the United States and bring it to the European Union and sell it over there, you will pay a 10% tariff. And at the end of the tunnel, you're also going to pay a 20% VAT, value added tax. So no matter how you look at it, even if the US cars are going to be much more better than German cars, for example, you still cannot compete in prices. And that's why if you look at a company like Tesla, they have initially started producing their cars in Germany and the entire European Union, the cars that they sell in the EU, because they know that if they produce those cars in the United States and they will ship it into the European Union, they will not survive. They won't be able to compete with the local manufacturers. And that's why Elon Musk initially planned Tesla in such a way that wherever we produce those cars or wherever we sell those cars, that's where we'll actually produce them. Finally, there are going to be new rules. And any kind of new rules are going to produce winners and are also going to produce losers. As an example, Caterpillar, which is a company that builds stuff, is suffering tremendously right now. But when we have actually set the rules after everything, they are going to win from this game. Why? Because they're actually manufacturing things in the United States, and they might actually receive a lot of demand. It's not easy to build a company such as Caterpillar overnight. They have the infrastructure in the United States. They have everything in place in the United States. So they might be a potential winner. They are going to suffer because there is a storm. They're going to suffer because there is uncertainty, because investors are selling off their stocks. So even good, great companies are going to suffer regardless whenever there is a crisis, whenever there is a storm. On the other side, there are companies who are going to lose. And these are the companies that have to actually abide by the new rules. Imagine you spend like 50 years building your entire global supply chain in such a way that you will be able to reduce your prices and sell your products at a price competitive level. But right now, because of these tariffs, you have to change everything you have built over the last 50 years. It is going to take you an additional investments of hundreds of billions of dollars. And if you think that Trump cannot force a company such as Apple to move manufacturing to the United States, let me give you an example that has happened recently. Indonesia, for example, has a requirement that if you want to sell your smartphones in Indonesia, you have to produce at least 40% of the entire phone locally, which means that in Indonesia. And when Apple did not comply with that rule, Indonesia banned iPhone 16 to be sold in Indonesia. And over time, Apple complied with the rule of Indonesia, and they started manufacturing their iPhone in such a way where at least 40% of their components are being produced in Indonesia. And Indonesia is one of the largest markets in the world. Just for the context, the US market or the US population, 320 million people. The population of Indonesia is almost 300 million people. So it's almost as much as the United States. Of course, there is no comparison in the size of the economy, but Indonesia is one of the fastest growing economies all across the world. And within the next 20 years, their economy or the size of their consumer market is going to be probably at least half of the United States. And that's the market that you do not want to miss, which is why Apple complied with that. So just like Indonesia forced Apple to spend billions of dollars to open factories in Indonesia, the United States can force Apple to do the exact same thing in the United States, even though that is going to be much more difficult because the cost of labor in the US is much higher than Indonesia. But nonetheless, so Apple probably is going to be one of the losers. Maybe they will actually adapt to the new rules and will take the best advantage out of it. But again, there are going to be winners and there are going to be losers. And if you actually know which stocks to buy and which stocks not to buy, then you're going to profit out of it. Because when the storm hits, most of the stocks are going to be sold at a huge discount. And then suddenly, when we have actually a clear idea of how the new rules are going to look like, the winners, these stocks are going to shoot by 50%, 100%, 200%, maybe even by 1,000%. So if you make the right bets, you're actually making a lot of money. But the real question is that how do you profit from the current crisis? What exactly should you actually be paying a lot of attention to? Number one, do not panic. Whenever you watch the news right now, every single day there are plenty of negative news. But if you panic, you will stop thinking clearly and you will make a bunch of mistakes. So the number one and the most important thing that you should do is to simply calm down and do not panic no matter how bad it gets. Secondly, cash is the king. If you don't have the money to buy the stocks that are being sold right now at a discount, you're not going to profit out of it no matter how much you want to do that. So if you don't have cash, you're not going to profit, which is why A good thing would be during this period is to reduce your expenses, is to make sure that you have as much cash as possible. Thirdly, do not buy stocks just because they went down. There is a very wrong understanding of the market that just because the stock went down, it is going to rise. No, it does not work like that. If the stock went down and the new rules are going to be in such a way where the company is not going to survive, the stock is going to collapse. Just because it went down, it doesn't mean it's going to rise. The stock is only going to rise when it has solid foundations and it has reasons to actually grow. And the only way you're going to know that if you've actually done your homework, you've taken a look at the numbers, you've actually done your analysis, and you know that this company is going to win and this company is going to survive and this is a company that is going to be one of the winners of the new rules that we have in place. If that's not the case, that company can still keep crushing and one day it will simply declare bankruptcy. So do not have that mentality, simply buy everything in the market just because it's going down. Number 4, dollar cost average. Now, I don't care how good your analysis are. I don't care how smart you are. At the end of the day, you're still taking a risk, even if you're Warren Buffett. So you must dollar cost average, which means that you don't know where the bottom is going to be. So if you, for example, found out or determined that this is the stock that is going to rise, you don't simply just wait for the exact bottom and you start buying it. You don't know that bottom. Maybe today everything is crashing. Tomorrow they're going to sign a deal and they will eliminate all tariffs all across the globe. And suddenly you have missed your opportunity. So if you've done your homework and you know and you want to invest in this particular stock, you start slowly buying it. Every 2 weeks, every 3 weeks, every month or so, depends on how you dollar cost average. And you might not actually make the best investment of your life by buying in the bottom, but you will be able to profit out of it and you will minimize your risks to the bare minimum. The only person who is allowed not to dollar cost average is Nancy Pelosi. And finally, be patient. If you're buying stocks and they're still going down, you should not panic again. You should be very patient. Just wait until the storm is going to pass. You don't know where the storm is going to pass. It might happen today, or it might happen tomorrow, or it might happen 6 months from now. If you know how the market works, you should actually stay calm and should be patient. If you have made your investments, you have to be patient in order to see the fruits of your labor. If you're not going to be patient, you're going to look at that stock every single minute, you're going to get out of control and you will sell at the wrong time. And if you want to know which stocks I'm buying, which stocks I'm selling, and which stocks I'm considering buying, and what investing strategy do I follow, then you can check the first link in the description. That's it for today, guys. Thanks for watching, and I will see you in the next one.